Interest rate is a good thing, but it's not the only thing you should look at while having or while making an important decision, especially regarding your money.
Yes.
Are you really looking at consolidation? Or are you looking at the growth? Growth of your fund. Don't put all this money in one basket. If you have 50 million, before you invest this kind of money, it is always important to understand your risk appetite as an individual, because different people have different appetites.
Yes.
Yeah.
Hi guys, I hope this video finds you well. My name is Martin, in case you're here for the first time. Na sisi ni watu wa insurance. But I hope you have seen we have done a few changes in our channel. And that is the name. And we have done it intentionally. Now sisi sio watu wa insurance. Okay, we are discussing insurance. But now the channel is different. But the theme is civic education, as well as reviews on insurance, especially within the Kenyan market. So msishangae, don't feel like you have gotten lost or maybe to a different page. We are the same, what were insurance, and we have been responding to your questions, those of you who have been sending to us, and we still encourage you to keep sending those questions because we want to help you understand this market, because insurance is a bit dynamic and you need to keep being updated, especially for those of you who want to invest or are consuming insurance on a daily basis. Now in today's video we want to do we want to tackle a question which was sent to us by one of our viewers, and I hope it's going to open your eyes. So in this swali ya mambo na investment, and I told you in an earlier video, nowadays insurance companies are giving you options in terms of investments. Kuna watu maybe wanafikiria insurance is just medical covers, education policies, motor insurance, but now insurance is having a diversity in terms of products, and today we are going to look at investments. So this is a client who wanted to know about which is the best investment option for someone with 50 million in Kenya. You have some money that you feel it's disposable and you need to have like a good investment. So we want to look at that, and do not be scared by the 50 million. Yours could be maybe 5 million, 20 million, or whichever amount. So just get the concept, get to understand that you can diversify your investment and get the best return on investment. So we have our friend and our partner who has been helping us to understand insurance better, and that is Moi. And we are going to have this discussion. Take a pen and a paper, like this video, subscribe, and leave a question and comment in the comment section below. Let's get into the video. So karibu sana bwana Moi.
All right, thank you so much Martin, and as always I want to greet our fans, our followers, people who shows interest in these matters of insurance, because it's quite broad, and as I always say, we can't really exhaust this in 1 or 2 months or even 1 year.
Yes.
Because it keeps on changing.
Yes.
At the same time, our clients' needs keeps on changing.
Yes.
There were times when our client really were interested in what we call capital assets.
Yes.
Like buildings and rentals. Now people have learned other ways of investing, and today we want to look at what else can we have for this client who have 50 million.
Yes.
Yeah. So the question reads, which is the best investment option for someone with 50 million? So what I can tell you is that there's no one particular way of investing, because different vehicles give us different returns. You could invest the same 50 million possibly in rentals, and it will make sense to one person, and it may not make sense to another person. Also, we have other investment vehicles or tools you can use. You can invest it in shares, you can invest it in business. And supposing you have the same 50 million, maybe you can purchase a fleet of lorries which can give you some amount of money. However, I don't want really to to speak about motor business.
Yes.
Or how you can invest using such a tool, because I'm not an expert on that area.
Okay.
However, we can always invite other people who are well endowed in terms of knowledge, so that they can try to expound on how else you can invest or you can diversify your investments. Yeah, so ours is, I don't want to call it limited. However, we have few but simple ways of how you can invest this money, such kind of money. Yeah, because as I've said, the capital assets, those are hardwares,
Yes.
or hard assets that generate. Sometimes they stay for a long time before we get our return on investment, or before you break even. Yeah, breaking even means that you have now gotten back what you invested.
Yes.
What you are waiting for is now the return. If you inject, for example, 50 million in real estate, that one could give you maybe 50 units, or let's talk of average 30, or somewhere around there, unit of 1 bedroom.
Yes.
Meaning that if 1 bedroom you are renting it for how much? Maybe 12,000, and you have 30. That is around 360,000 per month. Per month. However, we understand that also rentals has its own dynamics. It has some costs. I am not discouraging that. Actually, it's another way of investing.
Yes, I think maybe we can refer our audience to a
Yes.
video that we did back,
Good.
sometimes back.
Yes.
We were looking at the difference in terms of investing on a real estate or apartment as compared to money market.
Yes.
So I'm going to leave a link in the description box.
Yes.
Go and watch that video.
Yes.
So that at least you understand what we're talking about.
Sure.
But before we get into the video, for someone who has this kind of money, they want some clarity in terms of what do you look at when you are investing.
Yes.
And maybe what I'm talking about, there's someone who wants an assurance that where they're putting their money, at least is secure.
Good.
That maybe it's one. There's someone else who is looking for interest.
Good.
And there are those companies who will maybe offer very high interest.
Yes.
But there are other dynamics that you need to consider. So from where you stand,
Yes.
what do you really consider when you are looking at investing 50 million?
Yeah, so we have different things you need to look at when you are investing such an amount of money.
Yes.
It may sound colossal, but I can tell you it's not really much. Yeah, so if you have 50 million, before you invest this kind of money, it is always important to understand your risk appetite as an individual, because different people have different appetites.
Yes.
Yeah, there are those people who are willing to risk, and risk comes with return. Sometimes you may risk this,
The higher the risk, the higher
the return.
Yes.
So one of the things to look at is the risk appetite. Appetite for this client. Number 2 is, what do you really want to achieve? Are you really looking at consolidation? Or are you looking at the growth? Growth of your fund. At the same time, is what we call the tax implication. That is another thing that you may look at when investing such an amount. Also, you may look at the legacy. Yeah. What I mean by this is, where you want to invest this money, do you want to invest it in because no one knows about tomorrow. You may invest this amount of money somewhere, and then once you die, because that is obvious, sometimes it happens. Once you die, that vehicle, can it be contested? Can it become a subject of contestation in the event you are no longer there? Yeah. Or you want somewhere that you can put this money, and in the event you are no longer there, this money can go to the right beneficiaries. So
or maybe now, just to make it simple,
yes,
for those people who are looking to create generational wealth.
yeah, good. So that is why it is important to look at this as a factor. However, sometimes you need a financial advisor to walk you through this so that you can understand all the dynamics in each tool you are using.
Yes.
If it's a money market, if it's treasury bonds and such, all of them have different implications when it comes to this. So let's get down into this person now,
Yes.
who has who has 50 million. And our 50 million, our proposal would be, number one, don't put all this money in one basket. Yeah, you can divide this money possibly into 3 funds. Yeah, one of the fund you can do money market fund.
Yes.
Because this is a good amount. However, some other opportunities may crop up midway, and possibly where you tied this money, it's not easily accessible. Yes, or it's much hard to liquidate. Number 2 vehicle you may use these because what we want is we want as much liquidity as possible. And I'll tell you one of the secret about these investors. Look at Equity. Equity Bank doesn't really, I'm not a representative of Equity Bank. I may not really have a lot of information regarding that particular institution. However, we don't know so much of capital assets belonging to Equity Bank. Sijui kama ushaisikia hii property ni ya Equity, hii property ni ya Equity. They have a secret. You try as much as possible to maintain your money in a liquid form because of the opportunities. At the same time, look at the richest person, or the third richest person in the world, called Warren Buffett. That guy, almost 90% of his investments are only tied in liquidatable tools like stock, like hedge fund. Those are some of the things that they do. So with 50 million, we can put some under money market fund. We can put others in what we call unit linked plan. Yeah, but these are quite special. And you can also look at this. You can use it. You can also put some money in US dollar form. You buy money market fund in USD form. Yeah, so this one guarantees us liquidity, number one. Number two is that some of these tools can help us avoid hefty taxes. Number three, because all these are under insurance company, what you find is that anything that is under insurance company, it doesn't really form part of your estate. By that I mean, in the event of your death, this money only goes to the appointed beneficiary. So assuming you have a brother, and you have your wife and your children, and you happen to die, because whatever is in here you have already written, it's like a will. So that money, no matter what, can never be grabbed by
cannot be contested by people who are not in the contract.
Yes. It must be clearly indicated before you even invest. So that is why it is important to put some in here, because if you are looking at legacy, this one creates a good form of let me call it a trust. Yeah, it's very obvious that once you die, you have explicitly or clearly indicated that hii pesa inaenda kwa mtu fulani. You get so 50 million, you can put possibly 10 million in money market fund. This one can guarantee you an average interest rate of 10 It does what we call capital preservation 100%, meaning that whatever you injected under money market fund,
in the worst case scenario, your money
is 100% intact. At the same time, the beauty about money market fund is that because the books are closed on daily basis, so it means that at the end of the day, your interest becomes part of the capital. So that money, no matter what, it cannot be touched.
So the following day when we are computing interest,
yes,
the capital is yesterday's capital plus interest.
Good. So that very morning, what we have now is a new capital. So your money can only grow upward, it can never grow downward.
So what we are saying, when we're talking about capital preservation, it's going to be, how do I put it? Today's capital is now what we are saying is preserved.
That is what we are saying as preserved now capital, 100%. The only implication on money market fund is that there is what we call withholding tax. And number two, there is what we call administration charges. On this fund value. However, majority of companies, what you will find is that before they declare this rate, they've already taken care of what? Their administration fees. So whatever they say as the interest rate of the day, what only is remaining to be deducted is what we call tax. So kama wamesema today we are giving 10% interest rate, already wametoa yao interest, administration, ile kitu wamebakisha kutoa ni taxation peke yake. So that is one of the things that we can do. Now we have now a balance of 40. Yes, we can put 30 million here. 30 million here. The difference between unit linked and money market fund is this. Number one is that unit link has always have a higher interest rate compared to money market fund. Currently around 11 to around 12%. This is per annum. At the same time, it is also compounded just like in money market fund, and it has lesser tax, or it charges 0% taxation. So we wanted also to look at the implication of tax. This is how we can do a combination. So that million can be giving you a substantial amount of money. However, unit link, majority of them have a lock-up period, maybe of 2 years, others 3 years, because it is not only offered by one company. We have different companies that offers
different terms
and have different terms. However, ours is to always guide you on what best you can do. Now, the excess of 10M, you can convert this into dollars and invest it in money market fund using the US dollars. So currently, US dollar money market fund is giving between 5% to around 6%. But what we know is that you can take advantage of this US dollar account now, because currently the dollar is giving us around 127 shillings against $1. But the prediction is in the next 5 years, by the time we are hitting 2030, we expect this dollar to be around 170 to around 200. So meaning that when you buy now, when it is low, it's like still you are investing, because we expect the growth of dollar against. So those are some of the tools we can use.
So this is part of what we are saying. You need to diversify your investment. Don't put all your money into one basket.
Exactly, that is what I'm saying. You are actually allowed, because this is your money after all, you can use different vehicles in different companies. Unaweza sema this one I will put it in company A. I will put this in company B. and I'll put this in company C. You are allowed. What you are doing is that you have spread the risk such that there is no one point all the three companies can collapse. We have had scenarios when you've put all your eggs in one basket and something happens. Yeah. So, but if you are able to diversify, it's better for me and you. As your advisor, I can be able to tell you this company A is giving us this particular rate and these are the terms. Company B is giving us this. Yeah, so that is why it is very, very important
to diversify.
Yes, so if we have 10 million, yes. So if we have 10 million, thank you. So we have 10 million, and our 10 million, we are not depositing or we are not topping up anything. In the next, let's say 5 years, yes, in the next 5 years, how much shall we be having? 5 years is 60 months. At an average interest of money market, we said 10% daily compounding. In the next 10 years, 10 is 120 months. In the next 10 years, we shall have had an interest of 17 million.
So our capital from 10 million?
Yes, now we have 27 million. However, it is important to understand that you must pay tax. Only on what?
Interest.
Only on your interest. So that is money market. So we have, put that in mind, we have an average of...
let me compute here. Let me write it here as you do the calculations.
Yes.
So we have said on MMF.
Yes, so MMF, so we have said we have an interest of 17 million, yes. If we do 15%, so we shall have 14,400,000.
Okay.
So that is 10 million plus 14 million, that is 24 million.
Okay.
Yes.
So total is 24.
24 million. Let's now look at our unit-linked plan, which we invested 30 million. So the beauty about the unit-linked is that there is no taxation. Yeah. And at the same time, the interest is also compounded. So if we are topping up 0 for the same period, 10 years, at an average interest of 12%, we shall be having a 69 million.
So this is 30 million investment,
30 million investment. By the time 10 years are lapsing, we have 69 million as our interest. So we shall have 99 million.
Okay.
So that is our unit linked.
And this one we are saying is tax free.
It is tax free. That is the beauty. So that is what? That is unit linked. Our US dollar is, we said we shall allocate 10 million. If you convert that money into Kenya shillings, how much? It's around 70,000. Yeah, let's do at 1. So this is 10 million. We divide by 125. So it's around 80,000. So if we do $80,000, we are not topping up anything. The same period, 10 years. At an average interest of 5.5%, because that is the current market rate, we shall be having a interest of $58,000. So if we less tax on 58,000, this is $58,000. We less tax, that is 85. Yes, divide 100. Yes, so we have like $49,000. That $49,000, if we multiply that by possibly that market rate of $1, 10 years, could be maybe 200 shillings per dollar.
Let's just be conservative.
Yes.
Let's say even 180.
180. Yes. So that is around 8.8. So our 10 million has given us extra 8.8 million. Yeah.
So in total, we had a disposable income.
We had 50 million.
Had 50 million, eh?
Yes. Now, our money market
MMF,
fund in Kenya shilling has given us what?
224.
Has given
inclusive
us
of capital.
Yeah.
So in total, after tax and everything,
yes,
we have 24.
So money market fund we have 24 million. Unit linked we have 99 million. And our dollar money market fund is giving us.
Our dollar is going to give us 8.84.
Yeah, so total.
So 18 million. 18 million, eh?
18 million, yes.
So in total we have 24 plus 20.
So in total we have 24
plus
24 million plus
99, eh?
99 plus
18.
So we have 141 million in the next 10 years.
And this money we are saying is already taxed.
We have already put taxation into consideration. So our net average is around 141 million. So that meaning that 10 years we have grown our money by what?
60%.
Yes.
This 60% or more than? It's actually more than 60.
It's more than that, because 50 100% is 100.
Eh?
So it's around 130%.
130%.
Yes, 130%.
Okay.
So that is the beauty about money market. At the same time, it provides you with liquidity. Yeah, you can be able to see your money every day. Yes, and like tying up this money to a capital asset. Once you possibly buy something like rentals or bus or a lorry, we understand depreciation. So that may give you a service maybe 10 years, but of course with other costs. Yes. So I think that is what we can cover for now. We have other vehicles we can advise you on, but what we would deal with is soft tools that can help you accumulate your wealth quite fast. At the same time, look at what we are calling legacy. Yeah, so that even as you work, even as you accumulate this wealth, that money may not really end up at the wrong hands.
Yes.
Yeah, we understand what happens when you die intestate, or when you die before you write a will. Sometimes it can happen. You have even written the will. Unfortunately, you've left that to the wrong hands. Or in the wrong hands. Yes. Yeah.
All right. I think that's a very good presentation. There's something that you mentioned as tukianzia about risk appetite.
Yeah.
We said there is no investment that has no risk.
I agree.
So you would the advice is diversify.
So to mitigate or to minimize the risk, you can look at different things. Number one, if you really want to venture into a risky business which can give you optimum return, well and good. However, it is always important to put your money, especially when you have a good amount of money, you can put it in different vehicles, so that even as we do the average, the risk you've really umeshukisha.
Yes.
Yeah. So that the best way is to diversify, not really in the same company, because you can diversify in the same company, but you can diversify in different companies.
Okay.
Yes.
I think there is something else that we also need to highlight. Why investing in especially the facilities or the vehicles that are provided by insurance companies is a good way because of the insurance bit.
Yeah. So again, whatever you put in this, it's quite guarded by different bodies. One is CMA or Capital Market Authority. We have IRA, Insurance Regulatory Authority. We have the RBA, that is Retirement Benefit Authority. All those bodies keeps on monitoring the performance of a company every 3 months. They usually get a report which they can put on our newspaper to know which insurance company is not performing, so, and that one can caution our members. Yeah.
And also, it's good also to mention that even these insurance companies are normally insured by bigger insurance companies.
Agreed. Yeah. So we have quite a number of insurance companies, especially the tier one. We are talking of Britam, Jubilee, Madison, Sanlam. Those are big companies. However, sometimes the risk they carry could be more than they can handle in an event of a mishap.
Yes.
So what usually they do is that every money you put here, it must be insured with a bigger company than the company itself. Yeah, and majority of them have insured with insurance companies that are global, globally known, and they are not actually located here. Yes.
Okay, so basically, there are so many ways that you are assured that your investment is guarded.
Yeah, so you should not be worried, even as you do these investments. You should also be cautious of where you are investing, because you will find we have a lot of companies that deals with this. However, you can't really show where the office is.
Yes.
Make sure that whichever insurance company you want to invest in, you understand the locations, where is the head office, who really deals with this, are they regulated? Because at the same time you may invest in a company that you know nothing about, but by the fact they are giving you a good rate, you
in fact, it's good that you mentioned that. We were
Yes.
having a conversation with one of my clients, and he was telling me that what you are giving me in terms of rates, interest rates, is a bit low as compared to company B.
Yes.
And I told him that one of the mistakes that people do is to really make conclusions based on interest rates.
Yeah. So what I can tell our guys, interest rate is a good thing. But it's not the only thing you should look at while having or while making an important decision, especially regarding your money.
Yes.
Yeah, we've had scenarios where a company is declaring 18%, 17%, but where do they invest? That is the main question.
Yes.
The market is flooded with a lot of let me call them vehicles, investment vehicles. However, not all can give you a guarantee. Let me take or give an example. You have company A investing in what? In real estate. Yeah, it's an insurance company or it's an investment company, but its main investment tool is real estate. What do we understand about real estate? Number one, it is not it's volatile. I can tell you, because of two things. One, tenancy. Yeah, you could build and then
but you're not guaranteed.
You are not guaranteed
occupancy.
that you will have 100% occupancy. At the same time, you are not guaranteed that you have the houses you've built. They will be bought immediately. We are having a conversation currently about the housing project of the government. One thing is for sure. So we also have other private investors doing the same thing.
Yes.
So what will we have in the market? We shall have an influx, or the market is flooded. We have private, we have the government kind of competing to have what? To build the houses.
Share.
Yes. So that one can tell you a lot. At the same time, remember 2020, 21, 22. What happened? You have a lot of investors building, and COVID kicks in. What was declared? We can now work from home.
Yes.
Who is left with the office?
Nobody.
Nobody. So what happens to the investment? So you've locked, or the money is tied. There's no return. The only thing you have now is to wait. That is why we are saying, don't look only at the interest point or at the interest rate as the factor of do your due diligence.
Yes.
You would rather have your ROI like 10%, 11%. Rather than guaranteed, rather than having or being promised 18%, 20%. Yeah.
And remember, these are companies that are competing for the same market.
Exactly.
So if they know the best way to attract a client or customers or potential investors is on rates, but they are not talking about where they're investing their money.
Yes.
So you need to be very careful. That's why we need
you need to be to look at the same time. Look at this. Who are the main shareholders of that company? Yes. Are they people you can really trust? Because some of them are laundering businesses.
Yes.
Yeah. Ni mtu anataka kusafisha mali yake. So ama anataka kuitumia kama tool ya campaign.
Yes.
You open a pocket office or a pocket business today. You start attracting people. You collect. Then when it's around the wakati ya nini election,
yes.
sio kitu unafunga.
Yes.
Very fast.
It happens so many times.
Yeah, so that is why it is quite important. So we can go on and on about this conversation.
Yes.
But what we can guarantee our viewers is that we want to bring you something that can help you.
Yes.
You could be there with maybe 50 million, with 20 million. We have young guys with a lot of money, but they don't exactly know what is the best tool they can use to grow the money.
Yes.
So we are always here to guide you.
Yes.
If you feel you really need an advice, you can hit the comment section and write us a question.
Definitely.
Or you can DM us directly so that we can have a conversation around money.
Yes.
It is inexhaustible.
Yes.
We can't
exhaust this in one video.
Yes.
So I really want to appreciate you for that kind of a presentation. That was very good. Yes. And I think the most important thing we are looking at is creating passive incomes.
Absolutely.
Because if all you rely on is active income, then you are one month delay income to getting stuck financially.
Yes.
So someone who has some money pending in the bank and maybe that money is not earning interest, and which most likely is not earning interest, it's always good to consider investments, and that's why we did this video. And do not be scared by 50 million. Yours could be 20 or 30 million or 5 million. We can always have something for you.
Yes.
And that's the reason for this video. So thank you very much for watching this video to the end, and I hope you learned something. Make sure to leave a question in the comment section so that we do a video like this one. We are trying to give you an insight on anything insurance, whether it's investment, medical covers, education policies, whether it's motor insurance. Do not buy insurance blindly. We want you to enjoy insurance, and what we mean is we want you to buy from a point of understanding. So thank you very much for your support. Like this video, subscribe if you haven't, turn on the notification bell so that every time we post a video you'll be notified, and leave a question. We thank you and we appreciate you, and until we see you in the next one, God bless you and bye bye.
Bye bye.
Kabisa.